as like previous years, the Fed pivots and, turning back toward rate cuts, it's when it becomes really obvious that that's the direction they're going, that's when the metals have taken off. And I thought surely by the second half of the year, that will become obvious because they've hiked rates so quickly, the economy would be slowing. And instead, I mean, we've spent the last 3 or 4 months with, all of these manufactured headlines that make it appear that everything's great.
The Financial Survival Network. Now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz. Hey, we're in mid-September now, if you can believe it. Price of gold, well, it's been going down. Price of Starbucks, Big Macs, and everything else around you has been going up. We want to find out from our good friend, Craig Hemke, what is the deal here and when we can expect to see some movement. We are, Craig, in the vaunted third quarter where gold is seasonally goes up 80% of the time. Is this one of those 20% of the time that it doesn't go up?
Yeah. Hi, Kerry. Yeah, I tell you, as you're talking about that, I'm thinking like of dog years, like every human year is 7 dog years or, whatever the hell it is. And 2023 has extracted about 3 years of toll on me, I think. Or maybe another one would be, remember in The Princess Bride when Wesley's laid out on that rack and the six-fingered man comes in and says, "I'm sucking life out of you." That's what this year feels like. It's extraordinarily frustrating just for me personally, because I write my annual forecast every January, and it's like the conditions that I've been waiting for just keep getting pushed back. And it's driving me crazy. I thought, I expected, and you'll recall this from our previous discussions this year, I thought this year would be a lot just kind of flat for the first 6 months and not really go anywhere. And gold was up, I don't know, $100 maybe the first half of the year.
Yeah, 1985 did it hit?
Yeah. I mean, it had a pretty good first half. And silver too. And then I thought, as like previous years, the Fed pivots and, turning back toward rate cuts, it's when it becomes really obvious that that's the direction they're going, that's when the metals have taken off. And I thought surely by the second half of the year, that will become obvious because they've hiked rates so quickly, the economy would be slowing. And instead, I mean, we've spent the last 3 or 4 months with, all of these manufactured headlines that make it appear that everything's great, like the jobs report, where they go in, they tell you one number on the first Friday of the month, and then they come back on the first Friday of the next month and revise that previous one down, and then maybe revise it again the next month, to the point where nobody cares. I mean, back in June, what came out in July was a June report, and they said it was 207,000 versus an expectation of 230. And that was disappointing, but I mean, not that bad. By the time they gave us the final revision a week ago, 2 weeks ago, it was actually 105.
Mm-hmm.
If they'd come out with 105 on that day, the first Friday in July, God knows what would have happened. But nobody cares. The machines do their thing. Rate hike expectations are going up and the dollar goes up. And it's just maddening. So, like I said, I'm frustrated because I'm sure I'm like everybody else. You see where this is going. The Fed can't keep doing this forever. Hell, the Fed themselves are pricing in 4 rate cuts next year. But it's this postponing of that is inflating the dollar index and depressing the metals. And that's what's so depressing for all of us.
Hey, so let me throw some numbers by you here. So in 2022, the cost of a Thanksgiving feast for 10 was $64.05. Now, obviously, it's not a high-end feast like the Hemke household or the Lutz household has, but let's just call it an average. And what's good there is your basket is fixed. It's like the same turkey, the same cranberry sauce that I don't eat, and the same stuffing that I try not to eat because it's loaded with carbs. But it was up 20% from 2021. It was 53.31, and then it went up to 64.05. That's 20%. However, if you look at this year's July 4th barbecue, it was down 3%, according to, I don't know where they were shopping. Mind you, they weren't in Florida, but it was down 3% from 69, 68 last year to 67, 73. So maybe the Fed has won the battle and they can declare victory like Russia in the Ukraine, pick up and go home and start doing what they do best, which is printing more money. But it really is a tale of two money supplies, right? On the one hand, interest rates going up, deflationary. On the other hand, they keep pumping money into what is obviously a failing banking system.
Yeah. And they will declare victory at some point. They'll say, we're looking at how positive real rates are, and we've gotten Fed funds well above the inflation rate. And, they'll come up with all these reasons to print and monetize and all this, because they'll have to, given the debt situation. In the meantime, though, you make an excellent point, because this always gets lost in the spin and the mope, the management of perceptions of the daily headlines. Use that July 4th basket as an example, Kerry. It's down 3% from 2022, but how much did it go up from 21 to 22? And that's what, the political economists, and the people that with an axe to grind, to do this spin, they'll come out and say, oh, look, the rate of change that was 9% is down to 3%. Oh, isn't this great? But it's not those price increases from the last 2 or 3 years. You're not going back to where you were in 2020 and now adding 3%. It's just 3% on top of all that damage that was done. And everybody forgets about that. And so people, the individual just keeps getting stretched more and more thin. And I'll give you one more thing about the jobs report. They count part-time jobs as being part of this whole sum of new jobs. Well, if you look back even through the Bureau of Labor Statistics' own data, this year, we've lost hundreds of thousands of, I think even 1 million full-time jobs, and added, a couple of million part-time jobs. Well, that's not good. You've got people who, maybe you were making, what's the average, white collars, $70,000 a year. And you got benefits, you got health insurance, you got a 401k, right? And you get fired, you get laid off, you get downsized, whatever. You still got a mortgage to make, you still got a family you got to feed, all this kind of stuff. And so what do? You take 3 gig jobs. If you can't get rehired, you're going to go, work at Costco stocking shelves at night, and you might drive for Uber during the day and whatever. So you replace one really good job with 3 not so great jobs out of desperation. That's not good for anyone. However, hey, the media says, look at that. That's a net 2 jobs, we're told, by the Bureau of Labor Statistics. And so it's really, there's nothing good or positive about any of this. And I don't mean to champion that as so therefore you got to own gold. But what you have to do is you have to then look at the eventuality of how this all plays out, and the trillions and trillions of debt and the trillions and trillions now of debt service costs. Where's that cash going to come from? And you can kind of see how this plays out, even in the current structure of how the metals are priced.
Hey, and all those tech jobs, man, they were getting 6 figures, all of them. And there's like 100 or 200,000 less of them. So now they're part of the gig economy doing Uber. And you just see what's happening in China is exactly what's going to happen and happening here in the U.S. All of these people who were middle class, upper middle class, now they work for food delivery companies, barely making ends meet. Interesting. We were talking pre-call and discussed how premiums on gold are way up in Asia compared to vis-a-vis Europe and the United States. China's currency is pretty much and their economy is in full-blown collapse mode now. And that's got to have an effect on everything.
Oh, it certainly does. And will really be a big story as we, turn into the fourth quarter of the year. Japan too. I mean, the dollar yen is getting close to 150. And people to understand, when you see that quoted and it's going up from 140 to 145 to 150, that means the yen is getting weaker versus the dollar. So people, when they say, oh, I don't see that, it looks like it's going up. No, that means it's getting weaker. And last fall, it got to 150 and the Bank of Japan had to intervene and drive it back down. That actually is part of that turn the dollar index. That's all part of what that got the metals off the mat last fall when gold was down at 1650 and silver was down 1920. So those two countries and their currencies are going to be a big story here in the back, 100 days of this year. But this China thing is interesting. And the premium, they set up that Shanghai exchange, 10 years ago? Mm-hmm. And ultimately, it's all yuan and it's convertible into, essentially, by an extra step, into crude oil, that sort of thing. And it's a totally, I'm trying to get these words out of my mouth, physical market. You can't take delivery out of China. Now you can make delivery into China, but they're not keen to export any of their precious metal, and no one knows how much they officially own. I mean, that's all guesswork too. You remember the deal? It was last month, and there was this buildup for about 60 days about the BRICS conference, Kerry,
Yeah, sure.
And the BRICS are going to unveil this new currency and all that kind of stuff. And maybe someday they will. Eventually they will have some kind of trade settlement system outside of the dollar, because they've all learned, that within the U.S. dominated, current structure, you get sideways with the U.S., we'll just kick you out. And they're like, oh,
yeah,
we're going to be getting sideways with the U.S. We can't help but get sideways with the U.S. We better have an alternative. So that's the direction that's going. But the interesting thing about what's going on in China now is this disparity, this premium between the price that is being discovered and used to trade metal for renminbi, yuan, in Shanghai and the other physical markets in China is about currently 6% higher than it is for New York, London. And that's the highest that it's ever been. There was initially a gap when it first got going 10 years ago. And it's growing by the heck, Kerry, the difference in silver is 10%.
That's huge.
Shanghai, as we record, the Shanghai silver price is about $25.50 an ounce. And what is it on COMEX as we record? About $22.60, $22.70, something like that. So you think, okay, well, what's going on here? And this is where you have to wonder, is this related? Is this another step in this BRICS thing? I don't know. Maybe what could be accomplished by allowing that spread to widen? And most people here know, there's the idea behind arbitrage. If you've got a price discovered here and a price discovered there, and they're different, well, then you sell here and buy there, or you buy here and sell there, and you meet in the middle, right?
Mm-hmm.
So when you hear let's use a silver, for example, that you can buy silver on the COMEX, buy silver on the COMEX at $22.75, but you can sell it in Shanghai at $25.75. Why isn't that being arbed? Well, the problem is you're selling it in Shanghai. You're making a commitment to physically deliver silver at some date in the future in Shanghai. Well, there's logistics involved in that, right? And then additionally, why would China want that to happen? Well, that sure would seem a way to attract as much of the Western physical silver supply above ground as possible. You make it feasible logistically, and you say, oh yeah, sure, we'll buy as much as you want to sell us at $25.75. Bring it on over here.
Yeah.
And all of a sudden, your Western supplies of a critical infrastructure, battery metal, are suddenly getting hoovered up. You could say the same thing for gold, maybe in preparation for stockpiling gold for wherever they want to take it in the years to come. It's very interesting development, something everybody should keep an eye on.
Yeah. Hey, well, I think they're going to have to do something. I think the BRICS response here has more to do with their collapsing currencies than fear of being excluded from the U.S. dollar. All those countries, with the exception of Saudi Arabia, have had awful economic growth. for
Right.
for years now,
Right.
since the Great Recession.
Right. Right. And
So
we export our inflation to them. It's like the old John Connolly thing. It's our currency, but it's your problem.
yeah,
And so
I
all these
remember that.
developing nations have all their debt and it's dollar denominated.
Hmm.
And so as the dollar strengthens because of what, the rate hikes and everything else, all of those emerging market currencies are weakening and forcing them to buy even more dollars
Yes.
to service all of their dollar-based debt. And then that makes the situation even worse. And all of that could have dramatic implications for the global markets in the back 100 days of this year too. And so as much as it's aggravating and seemingly boring, and it's another year where, what's gold's average annual return for the last 10 years is about 9.5%, 10%. So we're on pace to do that again. And it seems like, it's putting me to sleep and it's frustrating. There's a lot going on. That's all part of the fundamental story. And, it just sets us up for continuing interesting years next year and beyond.
Hey, so what about what's happening in Argentina? They have a perpetual currency collapse. Is that what we have to look forward to?
Well, Kerry, I remember from when we first met 10 years ago. Back then, my site, when it was just getting started, we were writing about, and we still write about, the end of the great Keynesian experiment, this debt-based monetary system, which works fine for a while. But then, just the exponential math of it at the end is what does you in. You can't print it fast enough and grow fast enough in your economy to keep the plate spinning.
Yeah, to keep
the interest. The U.S. is entering into that phase now, it seems, finally. But you got other places like Argentina is devaluing their currency at the rate of 10% per month.
Yeah.
How do you even have a functioning economy in that, where you're demanding? I mean, the thing feeds on itself, right? If you're selling goods in Argentina and they're manufacturing things or selling cars or whatever in the Argentinian currency, I can't remember what it's called, and you're transacting in that, knowing that 10%, just a month from now, your money's going to, that what you got for that is going to devalue by 10%. Well, then you're going to ask for 10% and even more now, right?
Yeah.
And so it all just begins to go crazy. I watched a video from Tucker Carlson last night on his Twitter account, on his Twitter feed, and the term that came to me was Weimar Argentina, because it's very much a Weimar Germany type thing that's going on there. And it would be extreme to say that's where we are now in the US, because we're not. But if we get to $50 trillion in national debt, by the end of this decade, and on $50 trillion, you're paying 5% interest on average, just say 5. That's $2.5 trillion a year needed just to service the debt. And so that, the currency just devalues so quickly. And that, again, so yeah, gold, boring, frustrating, driving me crazy. And the bank's doing this and the short squeezes of that and everything else. But in the meantime, man, there's nothing better that I can be doing than just continuing to add physical gold and silver to my stack and just letting this all play out.
As you were saying that, a song came to mind from the hit play. It was a Broadway Tony Award-winning play called "Don't Cry for Me, Argentina." And
don't let me sing it.
Yeah, I'm not going to sing it, but it's. We'll put a link into the YouTube video. Let me see if I can find it here.
Of Tucker Carlson thing.
Yeah,
look it up on it. You can find it, Kerry, on his, and anybody can go. Just go to on his Twitter page, his X page.
Yeah.
He comes up with a video once every couple of days or so.
Yeah, sure. We'll put up a link to it. Yeah. And we'll put up a link to the song "Don't Cry for Me, Argentina."
Use the Madonna one at least, maybe.
I found it. Hold it here. Quick, let's see if it comes up.
I am Evita Ferguson. Yeah. Well, and again, this is always the end game, right? You can go all the way back. I'm trying to remember the guy's name. like Dionysius of Syracuse or whatever the dude's name was, who was the Greek tyrant in like the 4th century BC, who was, as at least in the historical record, the first cat to just figure out that if I call in all the existing money and then issue just twice as much to everybody after we do that, then all of a sudden there's all this extra money that we can then pay our debts for all our wars and all this kind of stuff. And man, this has been going on for 24, 25 centuries ever since.
Hey, and let's not forget Napoleon sold off Louisiana to pay for the wars.
Right.
And so, we'll see what Russia's going to be selling off. It's so interesting, the Ukraine-Russian war, because China now is making its move on Russian real estate. And you can see, like, Siberia, they've wanted to colonize it for years, but they were afraid of war with Russia. I think chunks of Siberia are going to get pried off. To keep the war going. They took over part of an island that was disputed, Russian island, recently. So, the knives are out. They want to carve up Russia and sell it off to the highest bidders or the best connected bidders, right?
You make me think of there's a stock I own. So like CNBC, the speaker owns this equity, so he's pumping it. But Eric Sprott told me about it, called Erdene Resources in Mongolia.
Yeah, I know. That's a rhodium producer, if I'm not mistaken.
It's gold now.
Gold. Okay.
Got some, as Eric would say, he's got some pretty exciting products, but it's this little company in freaking Mongolia. But if you think that, and so I own some, because if you think that is kind of an eventuality over there, because who knows, the Chinese, that's what you alluded to this earlier with the yuan. They've got a lot of printing that they have to do as well.
That puts us to shame.
Right. With, their deflationary forces and, whether it was, what's the new one? Country Garden or whatever is the other one.
Country Garden. And we had Evergrande and real estate company in China, as well as the banks. Every single bank in China is insolvent now.
Yeah. So
they've got currency controls in place, so you can't take out more than X amount per day withdrawals.
There you go. So, Kerry, in the end of the day, it gets back to why I started this site in the first place. I mean, we talk about metals, and there's never a shortage of stuff to talk about there. But like I said, going back to 4th century BC, this is how these things play out. And the world has been untethered now for 52 years.
Unhinged, I would say.
Unhinged, printed fiat, backed by nothing, right? Military power, I guess you could say, but really nothing. And in the end, you end up overprinting because that's the only way that can be sustained for a certain amount of time. And then you lose complete confidence in the currency. And the only way you can regain confidence is to back it with something. And that's what the BRICS are preparing. Hell, that's probably, a country like Argentina. I don't think they have any gold reserves, but that's a direction that they have to go to. You got to reestablish confidence in your currency. And so when all this plays out, that's the direction the world shifts. And that's why me and almost, I would imagine, everybody at my site, that's why we all just keep adding to our stacks in preparation for that inevitability.
Yeah, well, the one thing is that backing the currencies again with something, gold, whatever it might be, that is the end game, because it means giving up political power, right? The power to go write checks to all your friends and prosecute and persecute your enemies.
Right.
Because if you don't have the money to do it, you can't do it, right?
Did you see the thing yesterday about Pocahontas, right?
Oh, yeah, she's all upset with Musk now.
Yeah. And now she's got it. What is she worth? $200 million or something after.
Is she? Pocahontas is worth 200 mil?
I saw it yesterday. Yeah.
Hey, that's pretty good for a Native American from Oklahoma.
Right.
You know?
You would think she'd donate some to the res, and build some
Yeah.
community centers and stuff like that.
I would think she would. She's in favor of donating everybody else's money voluntarily. She should be donating some of her own.
Right.
Man, the goal
She's
of politicians.
probably not in any hurry to do it. But your point is right. I mean, as long as they can buy power through graft and corruption, they're going to keep doing it. But in the end, again, that pendulum swings all the way over here as far as they can go, and then gravity takes over.
And it's got a blade on it. And it's got a blade.
That's true too.
It's got a blade on the bottom, and it's not going to spare anybody.
Yeah.
So, hey, so you got to go over to TF Metals Report. Craig is running a special. The promo code, you won't believe what it is. I didn't. Gold. And hey, you'll get your first month subscription for a little bit less than the price of the current average price of a Big Mac. We're talking just the sandwich, not the Happy Meal, not the value meal, but just the price of a Big Mac you'll be saving. So, hey, by the way, Craig, I know you caught this ad on Zero Hedge because you're a prolific, enthusiastic reader, as am I. But the new gold rush in the United States is fat. Did you catch that?
No.
Basically, Big Pharma's pursuit of anti-obesity drugs is the new gold rush. So we have the ultimate paired trade. So Eli Lilly has this drug called Mounjaro, which is more effective than bariatric surgery, or at least as effective.
Yeah.
12 to 20,000 per year, and their market cap. Well, a share of Lilly back in 2020 was going for $100. It's now at $600. The number 2 drug is put out by, it's not Novartis, it's Nova something, and their market cap has gone over 400 billion. So, the obesity epidemic is making trillionaires. We're going to see Lilly will be the first $1 trillion big pharma company.
Jeez.
So the paired trade is buy Lilly, sell McDonald's.
Hey, I like it. I like it. I like it. But you're right. That's the shrewd businessman that I am. I'm running. I hadn't done this for months, and so I thought, well, maybe because this is going to get interesting. I mean, the next few months. I mean, the recession is inevitable. This hard, soft landing, buzz the field crap. I hear it every time. I've been hearing it for 35 years since I've been, got out of college and became a stockbroker. Right at the end. Right before the recession, everybody starts talking about soft land. Well, I can't believe we're hanging in there. It's because of the lagging effects. You got to let it all play out, brother. Kerry, we didn't even talk about commercial banking, in the senior loan officer surveys about how tight credit's going to get, and it's going to put more people out of work. But anyway, more of the story is this is going to get interesting. So I thought, well, for fun, if you want to join my site, you sign up. You buy a monthly subscription, you put in a coupon code of GOLD, that's creative, GOLD, and it'll cost you $5 for your first month. That's what you said, it's less than a Big Mac. Now, if you stick around, it's going to cost you the whole value meal. It's going to cost you $15 until you cancel.
All right, learn big bucks.
Right, I know. As you can tell, look at this extravagant studio I'm sitting in and the extravagant productions I put out. This is so high.
Keep the lights on. You got to keep the lights on. Remember, if there's a soft landing, it's because it's landing on the backs of the middle class.
Right.
That's the soft landing for the wealthy.
Right.
For the rich getting richer.
So anyway, if you want, I think people can learn a lot, not necessarily even from me, but from the other people on my site. So if you want to learn something, spend $5. And sign up, use that code GOLD, and then if you don't like it, quit. But I don't think you will. So please check it out.
High retention rate, damn near 100%. Very few people, once they sign up, actually cancel. Hey, you got a question for Craig, myself, shoot me an email, kl@kerrylutz.com. Write your YouTube comments down below. Craig, we'll talk to you again soon. I want to talk to you in a few weeks about the banking crisis as the effects become more obvious. We didn't even touch upon the fact that the emergency lending facility discount window every week goes higher and higher to records. But hey, there's nothing wrong, man. Soft landing, everything's fine, right? Nothing can go wrong.
Let's do it. Let's talk again, because that's a whole podcast right there.
Definitely. All right, we'll catch you in a few weeks. You be well. Thanks for coming on.
You got it, brother.